Following a stock's latest trend, which may be in any direction, is what momentum investing is all about. Investors would be buying big but expecting to sell much higher in the long sense. Taking advantage of the market patterns in a stock is important for investors who employ this approach. If a stock begins to follow a set course, the aim is for it to lead to a timely and successful trade. While many investors seek out stock momentum, defining it may be difficult. There's a lot of discussion about which metrics can be prioritized and which are weak measures of potential results. The Zacks Momentum Style Score, which is part of Zacks Style Scores, assists us in dealing with this issue. We'll take a look at AMC Entertainment, which has a Momentum Style Score of A right now. AMC has been knocked to the ground by coronavirus, but it is not out of the game yet. Welcome to Crypto Cryptid. Today we're going to look at AMC stock. And if you want to know more about crypto, make sure you follow our channel. Let's get into the video. AMC Entertainment is a movie theater chain in serious debt. It is a challenging experience to even be in it, particularly when people watch movies at home from one of the many streaming services available. Nearly 1,000 theaters and 10,000 screens were terminated due to the COVID-19 pandemic. AMC is attempting to restructure itself in order to rejuvenate itself for the digital age. However, it will be a difficult fight. In 2021, AMC lost $1.4 billion, or $3.49 per share. That's an improvement on the $1.9 billion it ended up losing in 2020, or $16.15 per share. Still, bleeding money is a major setback for the GME stock's fundamental tale. Investors, on the other hand, are considering the grand scheme. The corporation is reducing its long-term debt. As movie theaters open across the country and boost the seating capacity, big Hollywood studios are now producing convincing films for a return to theaters. By 2023, revenue is expected to reach $5.4 billion. However, losses are anticipated to remain beyond 2023. We're seeing large corporations acquiring AMC stocks when it's still cheap. We're also witnessing ordinary consumers investing in the stock because it is so cheap. Many institutions, including Vanguard, Wells Fargo, BMO Harris, BlackRock, Fidelity, and others, are purchasing AMC stock while it is still cheap. AMC is also one of the most common stocks, surpassing Apple and Tesla in terms of ownership. A squeeze we saw with GameStop is definitely possible as long as the stock is kept through its lows and peaks. Last Thursday, the company reported that it had completed a profitable at-the-market selling of 43 million shares. To strengthen its balance sheet, AMC has raised $428 million. Unfortunately for AMC, due to all those day trading momentum buyers, the market value for AMC stock has now become approximately $14 a share, or roughly 7 times what it was at the beginning of 2021. When looking for growing shares to invest in, based on the CAN-SLIM investment paradigm, focusing on those with a composite rating of 90 or above increases the odds of finding a real market leader. It's much better to aim for a 95 or higher, especially at the beginning of a new bull market. Given that AMC is a turnaround play though, it requires efforts to spend more potential strength. AMC has enough of it. On a scale of 1 to 99, a 98 relative strength rating means the firm outperformed 98% of all stocks in the IBD database. Experts claim that AMC has ample capital and won't need to collect any further before market dynamics rebound in 22 and 23, though it can still take strategic steps to boost the balance sheet more. Indeed, according to the expert, AMC now has at least 1 year capital buffer at existing movie attendance prices and probably longer than that given that attendance is improving. Because of the market's recent repression as a result of short ladder assault, many traders believe AMC stock will go as high as, if not higher than GameStop. This is understandable, considering that an increasing number of individuals and organizations are purchasing and holding AMC stock. Experts call AMC's decision to collect cash this month opportunistic rather than essential, and says the firm has already taken several measures to strengthen its balance sheet, such as renegotiating land lease conditions to accommodate for lower attendance at its theater since the pandemic. Simultaneously, the analyst claims AMC has improved cash flow forecast for this year, expecting a box office rebound into year-end, which would result in more sales to offset the company's expenditures. 2 of the largest movie-watching markets have largely removed capacity limits on cinema attendance. This loosening of constraints comes at the same time as the emergence of pent-up appetite for movie-going by moviegoers, who have been virtually shut out of theaters for the past year. Analysts also describe the lineup of summer blockbusters as impressive, and conclude the release dates for these films have begun to stabilize in recent weeks, making it easier to forecast the box office hauls that AMC would expect as the year advances. According to the analyst, box office receipts in the United States will be down 70% in Q2 2021 compared to 2019 levels, but just 35% in Q3 and just 20% in Q4 2021. In monetary terms, this translates to about $2.5 billion in sales this year, nearly doubling to $4.7 billion in 2022, and then rising about 15% to $5.4 billion in 2023, according to The Economist. AMC should nearly be back on track by that time, with a loss of only 35 cents per share in the fiscal 23. There's a theory that all of these stifled gains would lead to a huge short squeeze this summer. Again, this is all conjecture, but all indications point to significant gains. More serious than the issue of closing theaters, which will be addressed when vaccinations are distributed throughout the world, is the very real risk that moviegoers will never return in the same numbers. Cruise lines, for example, are hoping for a return to regular operating environment, but they are in operation with few substitutes. There are many more opportunities than ever before for movie buffs. In December, AT&T's Warner Bros. Revealed that, starting with Wonder Woman 1984, it would unleash the whole 2021 movie slate on HBO Max at the very same moment as the movies were released in theaters. During a period when the industry's theme parks were closing, streaming came to the aid, and the company revamped to make Disney Plus service and other streaming services a core part of the firm. Mulan and Hamilton were already available on Disney Plus, and Raya and the Last Dragon, the most recent film to be released, was streaming concurrently with its theatrical release. This isn't to say the movie houses are doomed. Internal polls reveal the pent-up appetite for theater outings, with CEO Adam Aron estimating 40 films initially slated for 2020 release will begin screening in May 2021. What to expect from AMC in the industry? Volatility accompanied by an upward market trend, short ladder attacks, headlines urging you to change your mind, hedge funds are expected to lose a significant amount of revenue. This stock is now being purchased by more large retailers. A sequence of gamma squeezes should be expected, and there's the possibility of a short squeeze at any moment. AMC has already taken various steps to strengthen its financial standing, and with the big firms holding its back, the price per share soars high. The theater's owner announced that it had sold 43 million new Class A shares at an average price of $9.94 per share, enough to see it through the remainder of the year. When it seemed that AMC would have to file for bankruptcy in January, it was struggling to raise $1 billion from lenders to remain alive. But it was able to take advantage of a soaring stock price, leading to a huge short squeeze. Since January, AMC's stock has been steadily rising, though not in a straight line. Beyond its stock price, the movie theater chain still has a chance to gain some much-needed traction in 2021. Though it is no longer on the verge of bankruptcy and its fortunes tend to be improving, AMC is also benefiting from US Centers for Disease Control and Prevention's announcement that people who have been vaccinated against COVID do not need to wear masks or maintain social distance in public. Movie studios are now ramping up demand, which could help re-establish theaters as a destination. Analysts wrote in a note to investors that AMC's improved finances, additional deals with studios on bringing films to theaters, and a global box office revival bode well for the company. The price target suggests that the stock already has a 25% upside from where it ended yesterday, but more positive news might push it even higher. However, the situation remains very unpredictable, with the stock up over 400% in the last year on just a quarter of the sales. Given these factors, it shouldn't be surprising that AMC is a number 2 stock and boasts a momentum score of A. If you're looking for a fresh pick that's set to soar in the near term to get into the AMC train, now is the perfect time to do so. Remember to keep the risk under control. Not all breakouts are successful, particularly when the stock market is in an uptrend. When IBD states that the market is in a reported uptrend, it means that institutional investors' purchasing demand is high. When it comes to stock exchanges, you want the wind at your back, not in your face. So set aside a budget for investing in AMC Entertainment if you want to do so. Since the stock is now uncertain, buy shares in small increments. When a stock's price is dropped, it's the right time to buy it. This would help you profit from your investment if the stock price increases again. The very last act that you want to do is invest more than you can afford to lose. This warning must be given. That's all for today. If you find the video helpful, please like, comment, and subscribe to our YouTube channel. Stay tuned for more cryptocurrency related news, and I'll see you in the next video.